This is True Multifamily, the show where we dive in on what really happens after closing a multifamily property. We're going to expose the role of asset manager. That's a person who has the responsibility of seeing the vision, executing the plan, and managing people, budgets, and timelines, all to deliver returns for our investors. These are the real struggles, the real victories, and the real stories of asset management.
Welcome back to another episode of True Multifamily. I am here with my friend, Alina Trigub from SAMO Financial. Alina, thank you for joining me today.
Justin, it's a pleasure to be here. Thank you for inviting me.
I love your virtual boardroom as your background. It looks big and beautiful and bright.
Hey, who says it's virtual?
Oh, I believe it. I'm a believer. Whatever you tell me, I'm in.
It is. Yeah, no, it is virtual. Thank you.
It looks great. So Alina, thank you. I know we scheduled this so long ago and we've been talking about this, and I'm just very excited to have you on the show. Someone that I look up to and really, really appreciate everything that you have shared with me in the past. And so I'm grateful that you'll be able to share some with our audience here. So let's start. Let's jump right in. Give our audience a bit of a background about who you are and what you're doing.
Sure. So again, Justin, thank you so much for having me on your show. It's a pleasure to be here. I started my journey almost 30 years ago when my mom and I immigrated to United States, and both of us decided that we both wanted to have a U.S. education. You know, for my mom, it was college number 3. For me, it was first school. I started college back in Soviet Union, but never graduated. So we started different schools, but started at the same time, and so worked our way through it. Both have multiple odd jobs, doing whatever women could do at the time, you know, cleaning, babysitting, and all that stuff, just pushing through, making it happen for us, getting U.S. education. And I didn't know what I wanted to do, but a lot of folks said that, hey, you're good with numbers, you're going to be good in accounting. So I took that as an opportunity and applied for, degree in accounting at Baruch in Manhattan. So I graduated with degree, still not knowing whether it's something I want to do. Tried both public and private accounting. As a tax accountant, I couldn't stand it. So I decided to leave accounting for good and move into information technology field. And that turned out to be a great move. I started out by testing accounting and financial applications, so my background really helped. And then I've done a lot of other jobs, but mainly most of the jobs have been to be the liaison kind of between the business and technology. So I was always connecting the two worlds, helping them talk to each other, understand each other. And while doing that, obviously my career was progressing, so was my husband's career was progressing. And I kept thinking about our tax brackets because they were also progressing up. And as a former tax accountant, I kept thinking about taxes, like, well, what are the ways for us to lower taxes? I could lower tax brackets, but I wanted to lower taxes. And real estate kept coming up, and I thought that I need to do something. So finally, about 7 years ago, I decided to take action, started researching, and after looking for property here locally in New Jersey and not finding anything where the numbers would make sense for me. Believe it or not, hey, not everyone can invest in Trenton, right?
Yes, New Jersey, for those who are not familiar, very expensive to taxes are make it very hard to buy a cash flow property.
And so and again, it's not for everyone, and not everybody is as resourceful as some folks and can find the properties where the numbers make sense. So I decided to start looking out of state. And as part of my out of state research, I came across the world of syndications, and I thought, wow, this is an impressive strategy. Not only I can invest in real estate, but I can also do it completely passively. So I decided to give it a try and invested as an equity partner in one syndication. And then trickle-down effect happened. I invested in the second, third, and so forth. And after doing it for a few years and talking to my friends, my co-workers, all corporate folks working either in information technology or financial services, I realized that most people have never heard of the word syndication. They were completely clueless. And I thought, I have to do something about this. I need to help these people diversify their portfolio, invest in real estate, do it absolutely passively without any interruption to their day-to-day life, and help them save on taxes. You know, the main reason why I started my journey of looking into real estate and investing. And so that's how SAMO Financial was born, with that sole purpose of helping other professionals essentially follow my footsteps. And I've been doing that for almost 3 years now, helping folks, working with them, working with a lot of investors, working on properties, underwriting them, doing asset management and some. So I've tried it all. I even had a change in my journey, obviously, due to the pandemic. A lot of people that had jobs were impacted, including myself. My position was eliminated this summer, and I decided that I'm at a point in my career where I can just concentrate on growing SAMO Financial, helping other people, and I can leave my W-2 world behind and left my corporate world for good at this point.
Well, I know that feeling, exactly that feeling. I know we spoke about that earlier this year as
about
well,
that.
and
Yeah.
I'm sorry that you went through it. But hopefully, now, 6 months later or so, you're seeing the benefits and feeling that W-2. I feel like the W-2 is an anchor, really. For me, it was a safety net and allowed me to stay comfortable. But since my position was eliminated as well a few years ago, the portfolio has grown and there's so much growth and explosiveness happening. And so I know that you're on that path, and more will absolutely come. So I want to talk to you because you started not with buying a single family house and duplex and triplex like a lot of people. You started by investing in someone else's deal. So what in your opinion makes a good operator? What can you, if you're evaluating a deal, how do you judge whether that deal is worth investing in? Numbers of course are important, but what about the operator is a good sign?
Sure. And I actually developed a whole list of questions that investors should ask operators. So if anyone is interested, I can definitely share that list. I have two lists, actually, a list of questions to ask operators. And then for those that are operating and doing syndications, I have a list of questions to ask investors, because believe it or not, there are two sides of both stories. And when you're evaluating someone, you need to evaluate as a syndicated investors, because you want to work with people that will be working with you for a long time. And the same with the operator. You want to work with someone who you think you want to work and invest with for a long time. So when it comes to the operators, my personal approach is to learn more about the person as an individual, the personal, professional career, find out what they've done in the past. And it doesn't really matter whether, they've been doing, well, it doesn't matter how many years they've been doing real estate, but what also matters is what they were doing in their previous careers and whether they can take those skills and transform them into the real estate. And, I can give you my own example. In my case, while I was the liaison between business and the technology, this is exactly what I'm doing now in a syndication world, by being the liaison between investors and the operators and helping to bridge that gap, helping the investors understand how syndications work, and helping the operators onboard the investors that are brand new, maybe not only to syndications, but also to the real estate altogether. So I do provide a lot of education in that respect. So in general, good questions to ask operators are how long they've been doing it. If they have partners, how long they have been working with these partners. What's their methodology? What's their strategy? Their strategy to do a quick kind of flip, and believe it or not, it's possible in real estate, buy and sell it, or do they want to hold the property for a long time and provide that residual income for many years ahead? Also, what have they done in the past? Have they always worked on the same asset class? Have they always worked in the same market? Are they changing markets? How they select in their market? Why they select this particular asset market? How they select their partners? Ask about their education background, and then do some background check. I mean, you can do criminal background check. You can even do a spot check. If someone says, for instance, oh, I went to Georgetown, go to their LinkedIn profile or go someplace else, go to Georgetown website and see if they are listed as an alumni, if they in fact have gone to Georgetown and received that degree, or whether it was just a certificate in real estate and they claim it as their college's alma mater, which should not be the case.
Wow, that's great. I have not heard that, but that's really, you're tough, and that's great. And so for any of our operators that are listening, I would take that and reverse it and make sure you've got all those questions answered. And if you're lying about Georgetown, you shouldn't be doing that anymore, for sure.
It's very easy to do a spot check, but believe it or not, I mean, people sometimes say things, they don't even pay attention. But if you pay attention to details, and again, someone who's done taxes, and I've done audit as a part of being an accountant in the public accounting world, so it's easy to do that audit, if you will, indirect audit.
Wow. Really, really great information. Thank you for sharing that with us. I want to jump right into your True Multifamily story, which is a property that you are asset managing, and you came in. There's a little bit of turmoil on this project. So can you share that story with us?
Sure. So there was some turmoil, and we've gone through some challenges with the project, but I've taken the asset management component about a year ago, and just to give you a rough idea, within the last 3 years, we've gone through 4 property management companies. So we're in a property management company number 4. And I want to say we're really happy so far, even though we're at early stages. But the previous property management company, they were doing an okay job, but they were a residential property management company. And this is a commercial project with multiple units, multiple buildings all together. And for someone who has residential experience, even if it's duplex or quadplex, is just not the right choice to select a residential property manager. And unfortunately, it wasn't my choice, but we've used that company for a little while and they've done okay. But I see already in the last few months a significant difference of transformation by switching to a commercial property manager. Number one, they're using the appropriate application. They use an AppFolio. The other company was using some non-branded small app, which was glitching almost every week. It was really tough to have access to the reports to see what's going on. This one is very different. On the first of every month, we get a report from AppFolio. We asked for multiple reports, so it was the settings were changed just in a number of minutes. And so we're getting all of the reports. So we didn't just want a condensed income statement. We wanted a detailed general ledger. So boom, it's a matter of just selecting that report and providing it to us. The property manager that manages our property is available. We have periodic discussions. We talk about other properties that they manage in the area. They give us tips and hints on what they do at the other projects, and we try to apply it to our property. So it's a lot smoother and easier, better experience overall. The previous PM, what they had in the shop was single families and duplexes. How can they relate to the challenges we're going through? If we need to rent out even a 1-bedroom, 1-bath, they can't compare it to a 1-bedroom, 1-bath condo. It's a completely different animal, and
right.
It was just not the right choice at the time. So I'm really happy we switched to the commercial PM.
So you've already given us some hints. So just what's the range and size? Like how big is this property?
I don't want to get into too many specifics.
Are we talking like around 100 units or 50
no,
units?
It's less.
Or
yeah,
less than that?
It's
okay.
less. Yeah, okay. It's less like.
Got it. That's fine. And then, so for this property, we've gone through multiple managers, and so it sounds like the key for you is the difference between residential and a more professional level management. Not that residential management companies can't be professional, but in the tools they use, in the way that they lease and manage these properties, we've seen the same thing. And I've spoken about this on the podcast many times, in that we've hired many property managers, and reporting it, believe it or not, a lot of people think reporting might be an afterthought, but for me, that's one of the most important things is, are we getting the data that we need? Because All that data that we look at every week as an asset manager has to be clean. And if we have bad data coming out, then we're not going to be able to make the decisions that we want to make.
Exactly, Justin, you make a great point. As I think about it, people can say 1,000 words, they can say whatever, but when you look at the data, when you see what the rent roll is actually showing, what's going on in a general ledger, what kind of expenses are they making, and what are they spending money on, whether it's Home Depot and whatnot, and something else, then you know the full picture. There is no need to say anything by just looking at the general ledger entries. So that helps a lot.
Right. And so you found that even just the difference in tool that they use from the old company to the new company has been a success. But let's talk about when you came in and you were evaluating new companies, what else were you looking for besides the tools that they were using? So
we interviewed at least four the PM companies altogether. And this was not the closest one to our property. There was another PM that was literally like a mile away. But what I liked about this one is the professionalism, and not only the way they answered questions. I actually liked the fact that they were asking me questions. Like other PMs were more or less like, yes, no, yeah, this is what we do, this is how we've done it. But this PM company showed interest. They asked us questions. How many units have you had? How long have you had it? What kind of renovations you've done? What are you doing to rent out all of the units? We had higher vacancy when we were looking for the new PM. So they showed interest in our property. And not only that, when I answered the questions, the PM gave me some ideas of what they do in their properties to reduce vacancies. They talked about the different advertising techniques that other companies haven't even mentioned. Maybe they do it, but they haven't mentioned it to me. So how would I know that they do it? So that interest and that desire to help us select them. On top of it, the PM owner told me that they're also real estate investors, and that kind of triggered it as well, because if they're investing in real estate, that means they understand all the pains that we as investors are going through, and it'll be easier for them to relate to our stories, and it'll be easier for us to fine-tune the approach and find the right strategy for property. So I'm really happy with them.
Our best management companies that we have own properties and do third-party management, and because they understand, how every penny, saved on the expense side makes a huge difference, and the cleanliness of the reports and data and timeliness of it as well. They get all of it, top to bottom, and so that I think is a huge indicator for success as well if they own and manage as well. So what are some things that would maybe turn you away from a property management company? They sound good. They're asking you questions, which shows they're engaged and they're doing some homework. But what are some other red flags that might turn you off from a management company?
So for one, as we talked about, again, I'm a technology professional, and I believe that a proper application is essential for any property management company. When property management companies mentioned me that they're using some old technology, or they haven't switched to a web version or something like that, or they're not up to date, that kind of turned me off. Also, the fact that they do not have bookkeeper. Granted, we don't want to use their bookkeeper. We have our own bookkeeper, but I want the property management to have their own bookkeeper on staff if we need to compare the books, if we want to make sure that everything matches. I want them to be going through the reports and kind of auditing the transactions and reviewing it to make sure that everything balances out. Outside of it, timeliness, effectiveness, the way they respond. And you'll see that even before you hire them, when you email them, when you set the time to talk, some are late, some are not responding to emails. There's the way they respond to emails. That also shows their professionalism and the way they treat their customers. And also talking to their existing customers. I spoke with clients of all of the property management companies we interviewed, and obviously they're going to give you references of people that have been happy with them, but when you talk to someone, when it's not an email or a text, when you have a conversation, when they talk about property management, there are certain things that you can notice that may be working out for this particular person but may not work out for you. For instance, I spoke with one individual and he said, oh, I've given the property to PM. They're in California, and the PM is local, of course, and the property is not in California. And they said, oh, I speak with them maybe once a month, maybe less. I don't bother them, they don't bother me. So to me, that's not the right approach. And if it's not for the owner, then the property manager should be saying, hey, we should talk at least once a month, because there's always something going on, especially in this particular case. The owner bought the property within the last 3-4 months. So to me, it's an indicator that neither one of the parties are too engaged. And, if they're not engaged, then maybe everything is going well, but they have to be in a loop of what's going on, and they have to be discussing it. So that
Sounds like a property I might want to make an offer on sometime
Yeah.
soon.
Exactly.
Right. It's not a recipe for success if you're not talking to your management company. We talk on a weekly basis, and some when we have a lot of construction and renovation going on twice a week. And
Exactly.
You have to keep a pulse as the asset manager. You have to keep a handle on every detail, so you can make sure that your business plan is being executed properly.
Completely.
So can you give me a few specific things that your new management company does that makes you really happy, and is a good sign that you feel like you're in the right hands?
Number one, they're very responsive. Whatever requests or ask was sent to them, I wouldn't say that they deliver 100%, but if they don't deliver what I'm asking, they'll deliver a variation. They'll do their best to deliver what I'm asking. Number two, I like that they use a professional software. AppFolio is phenomenal. Provides all the information that we need. And the last thing, what I liked about them is, while they do basic maintenance, obviously they don't do all of the renovations that are needed within and outside of the units, but they do have a list of preferred vendors. And because they provide a lot of business, they have preferred rates as well. So we were able to make some savings on renovating the units by working with this company, where the previous residential PM would just call local contractors and give us the rate that they were given. There was no preferred rate at all.
Absolutely. Yeah. It's amazing when you get some power and scale. And if you choose a manager that has enough properties in a market or in an area, they have scale. It's not that you have to have all those properties, but if they have properties, we just got some great landscaping contract pricing because our manager in one of our cities put every property they have and said bid every single property. I mean, we're saving like 35% on management in 2021, or on landscaping in 21 versus 20.
That's huge.
Which, yeah, I mean, you would expect costs to be going up, and here we're getting an incredible discount. So I'm really excited about that. But it shows the power that a great property manager can have when they have scale in a market, because they can put the weight of many properties and many units out there and sort of get what we all need, which is the best pricing and quality.
Agreed.
We're going to move towards the end here. I'm going to give you a moment. I know you've got something that you want to promote to our audience. And while you're doing that, I want you to be thinking about your true multifamily tip, which is going to be advice that you would give to someone who is looking to get into multifamily investing as an operator, what they can do to be successful in investing. But we're going to make them wait. We're going to give you a second to promote yourself real quick.
Sure. I've written a course last year for those folks that are starting out in real estate or have not figured out what they want to do. The course is how to select the best real estate investing niche. And I want to clarify, well, the course is not going to tell you, hey, become a flipper or become a wholesaler, but it will guide you in a direction that will help you select that niche for you. The course is available on Udemy, and I'll give a discount code for your users. That's one thing. I also have a portfolio diversification in e-guide that I wrote a while ago. I will share it with you, Justin, so you can share with your listeners. It's a free guide.
Okay. Love it. Thank you so much. If you guys want to take advantage of that, all the information will be on our website, truemultifamily.show. Just look up Alina's episode and we will be happy to share that with you. And you definitely take advantage of that because Alina has so much value to add to everybody. Also, her social links and links to her website will all be up there as well. So Alina, putting you on the spot here, your true multifamily tip for our listeners.
Integrity. I think it's so important. It's so important, essential. Obviously, you're gonna go learn how to do it. You'll make mistakes. We'll make mistakes. We'll learn from our own mistakes than someone else's. Although I do highly recommend learning from someone else's mistake.
It's cheaper.
It's much cheaper. Even though you may pay some gurus $10K, $20K, whatever it is, but it could be cheaper to learn from someone else's mistakes. But integrity is something that you cannot learn. It's something that you must have. And when you have integrity, when people know that you're honest, transparent, no matter what, always share what's going on. We've gone through challenges with our properties. Nothing is perfect and nobody is perfect. But as long as we share, as long as we're fully transparent with our investors and telling them what's going on and what we're doing to correct and fix the problems, it's going to be okay. People will respect you and people will continue want to work with you. But if you're not honest, if you're hiding something, I'm sure it's going to turn out against you at one point or another.
I could not agree more. Absolutely. We've all had tough days. We've all had challenges, especially in the last year with COVID-19. I mean, it's not easy. We don't always have the answers, but the key for me, for what you said, is integrity, but also sharing the plan. It's not just like, hey, there's a global pandemic. We'll let you know what's going on. It's here's what we're doing, and here's what we're trying, and it may not work, but we're trying this over here. We're trying that over there. We're hoping, and we're experimenting, and we're working to make this property successful. And so
exactly.
Keep them in the loop. I love that. Such great advice. Alina Trigub, thank you so much for coming on the show today. And if you like this episode, please like, subscribe, and share for us. We would love if you left us a rating and review. Thank you, Alina. We'll see you next time.
Thank you, Justin. Pleasure to be here.
Thanks for listening to another episode. Check out our website at truemultifamily.show. And if you have an amazing story to tell, share it on our Facebook community, and you might just be the next guest on the show. We're also on all other social networks. Just search True Multifamily. I'm really, really proud to have the show produced by our company, On Air Brands. Check us out at onairbrands.com. We also have an incredible, unique podcasting event that we would love for you to be a part of. Check that out at podmax.co.